This is just a regular candle on the chart, and when it forms in a certain way, it can actually hint where the market is likely to go next. But here's the thing, everything you think you know about candlestick patterns probably just doesn't work. Hammers, dodges, engulfings, none of that will give you consistent result unless you add one key element I'm about to show you. The problem is, most traders treat candlestick patterns like some cheat code. They see a picture somewhere, spot something similar on the chart, and jump straight into a trade. And yeah, candles can be used to predict price, but most people use them completely in the wrong way. They see as for example, a bullish engulfing. They just buy. A price just go reverse and dumps. Now, what if I told you that there is a way to know in advance when that move is likely to fail? So let's break it down. Every candle on the chart falls into one of three types: an indecision candle, a shift of control candle, or a power candle. Let's start with the strongest one. A power candle has a large body and a small wicks. It shows that right now buyers or sellers are fully in control. But it can be even stronger if a power candle forms with a big body and no upper wick at all. That's an extremely strong signal. Buyers face zero resistance from the sellers. For bearish candle, it's the opposite. A large red body with a no lower wick means sellers face no resistance from buyers. These candles don't show up that often, but when they do, it's a clear sign that one side is dominating the market. And just like in a lot of things, size matters. Here are 4 examples of power candles. All of them show buying pressure. But the bigger the candle, the stronger the signal. The largest one is the clearest sign that buyers are in control, and the candle number 4, and even though is still a power candle, is much weaker compared to the first one. Big power candles, strong buying. Small power candles, weak buying. Remember that. So, what happened when control suddenly shifts to the other side? That's where the second types come in. The shift of control candle, or simply just a reversal candle. The wicks tell the story here. If a candle has a long upper wick, it means buyers tried to push price up, but got rejected, so sellers stepped in and pushed price back down. These candles usually have long wicks and a small body, and the body itself doesn't really matter. It doesn't matter if it's green or red, the real story is the wick. That's why these candles often mark a potential reversal point. Along lower wick, you can expect a move up. Along upper wick, you can expect a move down. And when no one is in control, the candle looks completely different. That's the third type, the indecision candle. It has wicks on both sides and a small body. It shows a balance between buyers and sellers, but no real progress. There are many variations. It can look like this, or like this. The key idea is a small body but roughly equal wicks on both sides. Most people know this as doji candles. These candles often appear before big moves, either breakouts or reversals. The market is basically deciding what to do next, but hasn't made up its mind. Now, here's the important part. Never enter a trade based on just an indecision candle alone. By itself, it doesn't tell you who's in control. But when you combine it with the next candle, everything changes. For example, you get an indecision candle, and right after that, you see a reversal candle. That tells you that during that indecision phase, one side, let's say buyers, actually took control. From there, you can wait for a pullback into that indecision candle and look for an entry. You can also use this as a reversal setup. Price drops into a demand zone. As soon as it gets there, you see an indecision candle. That's your first sign that selling pressure is slowing down. Then you add a power candle on top of that, and now you see buyers stepping in. So it all starts with that indecision. It's the first signal that something is about to change. If you are listening to this and thinking, okay, sounds good, but how do I actually use that in real trading? We've got a free Telegram channel where my team and I share regular setups, market analysis, and break down the hottest news. Inside, you can trade alongside profitable traders and start understanding how the market actually works. This is what the channel looks like, and these are results from beginners who came in just like you, after watching one of the strategy videos, and now they are trading in a profit with my team. Check it out, link in the description. Now, let's take all 3 candle types and break them down on a live example. Here's a section of a price action. We started with a small downtrend, but if you look closer, something interesting is happening. During the drop, we've got 3 indecision candles. Price is hovering at this level and not sure whether to go up or down. But here's the key part. This red candle has a long lower wick. Sellers tried to push price lower, but buyers stepped in and pushed it back up. Buyers are showing interest at this level. Right after that, we've got a power candle. Buyers are stepping in aggressively. That's your first signal that a move up can start. And that's exactly what happens. Sharp move up, multiple power candles in a row. And here's another important detail. It took sellers quite a while to push price down to this level, but buyers erased this entire move in just few candles. To be precise, it took sellers 22 candles to push price down, and buyers did the same move in just 4 candles. That's a big signal. Buyers are stronger, which means they are likely to stay in control. And that's exactly what happens. Since a strong move started from this area, we call it a demand zone. We mark it by taking the range from the low of the candles where the move just started to the high of the same candle. That's our demand zone, where buyers show interest. Keep that in mind. Price moves up a bit more, and then we get a red shift of control candle with a long upper wick. Buyers tried to push higher, but sellers stepped in and pushed price back down. Sellers are taking control here. Right after that, a strong red power candle. Sellers are confident at this level and ready to push price lower. And that's exactly what happens. Now we mark the supply zone. We find the start of the sharp move down and draw the range from the low to the high of the candle. So that's our supply zone, where sellers step in and take control. Keep that in mind too. Price continues to move lower a bit, and now we've got this structure. This chart is telling a very clear story. Let's break it down. First, look at the speed. Buyers pushed price up incredibly fast, just a few candles. Sellers did manage to bring it back down, but their move was much slower and took way more candles. The initiative is clearly on the buyer's side. Second, price just tapped our demand zone. Last time, a lot of buyers stepped in here, so it's reasonable to expect the same reaction again. As price hits demand zone, we get a green shift of control candle. Sellers tried to push lower, but buyers stepped in to control and push price back up. Right after that, a green power candle. More confirmation of bullish momentum. At this point, buyers are clearly in control. Now we just need to use that. For the entry, we wait for the price to come back to the reversal candle. And that's exactly what happens. On top of that, we even get another reversal candle, which is a great sign. We enter as price steps that zone, takes profit goes into the supply zone where the sellers previously stepped in, stop loss goes just below the demand zone. And in that kind of setup, there is no guessing. We read the structure, identify it where buyers and sellers are active, and price moves straight to our take profit, just as expected. And with all that, there is one thing you absolutely need to understand. Never enter a trade based on a single candle. You see one green power candle and instantly buy? Over time, that just doesn't work. Use candles like a story, like a book the market is telling you. You need multiple factors lining up, and you need to identify zones where buyers or sellers clearly take control based on how those candles form. Once you start doing that, you'll be able to spot areas where buyers are likely to win and areas where sellers will take over. Apply this and you will see your take profits getting hit way more consistently. My name is Dennis, I've been trading for 7 years, and I can tell you this for sure. The best thing I could have done at the very start was to follow experienced, proven traders. To save time, save money, and actually learn by doing. So, see you in the channel. Trade smart, respect the risk, and I'll see you in the next video.